Hello everyone, thanks for joining us this afternoon and welcome to our webinar on travel pricing. And we're going to cover some of the main points around advertising prices in the travel sector and run through some slides. So by way of introductions, I'm Lydia, I'm from the communications team here at the ASA, and I'm joined by my colleague Emily from CAP's copy advice team, who's going to talk us through some of the issues that advertisers might face when making travel prices. If you've got any questions about these issues in relation to your own ads, please take note of them and feel free to send these to us at the end of the seminar, or you can always submit an inquiry to our copy advice team via the website. We'll give you details on how to do this at the end, and if we're receiving sort of multiple questions about the same thing, we'll have a look at creating maybe some specific guidance which could make sure advertisers can easily find the answers that they need. So hi Emily, over to you.
Hi Lydia. So before we start, I'll just give a quick overview of how the ASA and CAP work for anyone who isn't familiar with the system, and just explain how and when advertisers might find themselves dealing with each. So there are two sister bodies, the Committee of Advertising Practice, or CAP, and the Advertising Standards Authority, or the ASA. CAP's industry facing and writes the codes and gives advice and training on these. The ASA is the consumer facing side, investigating and ruling on potential breaches of those codes. If someone complains to the ASA about an ad, they will assess whether it's a problem or not, which may involve further investigation. If, as an advertiser, you do get contacted by the ASA about a complaint they've received about one of your ads, don't panic. They'll take you through the process. If they carry out an investigation based on a complaint and think your ad has breached the code, it might be resolved formally or informally, depending on the circumstances and the issue. There are two codes. Which applies will depend on the media. The CAP code applies to non-broadcast advertising, and the BCAP code applies to broadcast advertising. Both codes have a section on misleadingness, which is the most relevant one to our discussion today.
Thanks, Emily. That's a really useful introduction. So on to travel pricing specifically. It might be helpful if you just give us a general intro to start with into some of the stuff that we're going to be discussing today and why it's important.
Sure. So booking a holiday involves many different costs, which are often added to the total costs of flights, transfers, or accommodation. When we're booking a holiday, we should be confident that we know the price we're going to have to pay when we initially see the ad. If there are any additional costs or fees which aren't made clear in the ads, for example, or if an ad exaggerates a saving, or if there's inadequate availability at the prices stated, then that's likely to be misleading. Advertisers have a responsibility to ensure that they're not misleading consumers and should ensure that their ads contain all the necessary information and that this is presented the right way in line with the codes. The ASA does appreciate that there are some details which are specific to the travel sector which present challenges, such as the nature of dynamic pricing, and that when working with third parties, advertisers might not have the complete information about the availability of certain aspects of a package holiday, like flights or accommodation, because these are controlled by another advertiser. I'll try to give some clarity on what advertisers have to do in light of these sector-specific situations, as well as more general details around pricing.
So, Emily, what's the first thing that an advertiser should think about when stating a price?
So, Code Rule 3.17 on the slide now states that ads must relate to the product featured in the marketing communication. Making clear what a quoted price actually relates to is important. If an ad creates the impression that the price stated relates to all flights within Europe, for example, by stating fly to Europe for X pounds, when it only applies to flights to particular countries or airports in Europe, this will be problematic. It should also be clear what's included in the price. If consumers have to pay extra if they want breakfast or to use the Wi-Fi, then the ad shouldn't create the impression that these are included, for example, by including them in a list of features.
And you mentioned non-optional costs and charges. So what about these costs? What sort of things typically are non-optional, and how do advertisers need to present those?
So again, we'll look at the relevant rules to this. Code Rule 3.18 on the slide states that quoted prices must include all non-optional taxes, duties, fees and charges that apply to all or most buyers. Non-optional fees and charges are all charges which consumers have to pay if they want to purchase the product or service. They tend to be things like a booking fee and airport taxes. As stated in the rule, if these can be calculated in advance, they should be included in the quoted price. It's not enough to simply state that extra fees apply or to include them alongside a quoted price. Sometimes non-optional fees can't be calculated in advance, and Rule 3.19 here acknowledges this. These might be situations where the fee is dependent on information which the advertiser doesn't yet have, or if the fee might change before it's payable by the consumer. An example of this could be resort fees or local taxes, which are payable when holiday goers get to their destination. Sometimes advertisers can't work out what the cost will be at the time the consumer goes on holiday because the fees or the exchange rate change regularly. In line with Code Rule 3.19, where fees can't be calculated in advance, the ad should include a clear statement that these will apply and give an indication of what this cost might be. This should be presented clearly close to the price claim so that they are easily seen by the consumer. Often these costs can be a significant addition to the cost of a holiday, and consumers should know that these are payable and what they are likely to be. Here's an example of just that. So the complainant in this case had to pay a non-optional resort fee of $400, which was not included in the price. The advertiser did explain that these fees were communicated to the consumer during the booking process before they made the booking. However, the ASA didn't consider this sufficient. In this case, because the fee could not be paid at the time of the booking and was charged in US dollars, meaning the cost could change due to exchange rate fluctuations, it did not need to be included in the fee. However, it should have been clearly presented in US dollars alongside the price claim.
So you see a lot of ads for holidays that offer discounts or lower prices available for a short time only or a limited period. And what kind of things do advertisers need to consider if they're thinking of offering something like this?
So 3.17 applies again here. Marketers making saving claims against a reference price must have evidence to demonstrate that the reference price was genuinely the price at which the products would have otherwise been sold. When considering if this is the case, the ASA may consider things like the duration at which something has been on sale for at the was and now prices stated and the amount of sales made. When making any savings claims, advertisers must be able to demonstrate that the pre-discount price stated is the genuine price which the consumer would have had to pay were the offer not running at that time. We do have some more detailed guidance on this, which has some examples of rulings, which you can find on our website. So the ASA does appreciate, though, that in the travel sector, pricing can be dynamic and may change regularly based on various factors. If this is the case, it can be hard for advertisers to demonstrate what the usual selling price for a particular holiday would be when advertising a discount. However, whilst it may be more challenging, advertisers would still need to do this, and the ASA has seen advertisers do this in compliant ways. Here's an example. So in the past, including in this case on the slide now, the ASA have considered discount codes, which the customer applies directly at checkout, acceptable. In these cases, the ad displayed the full current price of the holiday and advertised a discount code alongside this, which enabled the consumer to deduct a certain amount from the full price before they paid. Whilst the prices may have fluctuated, by applying the discount code at the checkout, consumers knew that they would be paying £100 less than they would otherwise have paid at that same time before the discount was applied. If you want to view this ruling, you can search for it on our website using the advertiser name, which is on the screen. We're not saying that advertisers have to use this particular model when offering price promotions or that this is the only way of doing it, but hopefully this is just a helpful example of one way that advertisers can get it right.
Thanks, Emily. So sometimes we get complaints in where consumers haven't been able to get the price they've seen in the ad. How can advertisers avoid this kind of situation?
Unless all flights are available at the quoted fare in the ad, marketing communications should state prominently that prices are from X pounds. In the absence of from or up to in front of a price claim, consumers are likely to interpret the claim as meaning all products will be made available at that price. But even where advertisers do state from, this isn't necessarily enough on its own. When using a from price, advertisers are responsible for ensuring that a significant proportion is available at the from price advertised. What's considered a significant proportion will depend on the ad and what's being advertised. If you want more information on this, you can read our guidance online or contact copy advice. So this will apply to marketers who are advertising and selling their own products, where they have control over the prices and availability, which might not be the case for marketers working with third parties.
So a lot of the holidays that people book are built up of various elements from different providers which are put together to make a package, things like flights, accommodation or transfers. Is this what you mean when you say working with third parties? How does it work in this scenario?
Yeah, exactly. So we understand that many travel marketers don't have fixed arrangements with third parties, with elements of travel packages made available through shared systems. This can result in unpredictability around the availability of prices, particularly in a fast-moving sector. Advertisers are unlikely in these cases to be able to monitor real-time availability of flights or accommodation, meaning fares or rates may not be available at the stated price by the time the consumers attempt to make a purchase. While we acknowledge that this presents a challenge for marketers, they should ensure that they take reasonable steps to reduce the likelihood of consumers being misled. If a price appears on a marketer's own website, which consumers can go on to book online, they must be able to show that the price displayed was based on a genuine price that was available to consumers when prices were last updated. The prices should also be updated frequently, and it must be made clear to the consumer how they can check when the prices were last updated. If an ad appears in third-party media, it may be slightly different. This is the case with online banner ads, newspapers or posters which direct consumers to call or go online to book. Then it might be the case that by the time the consumer does this, the prices advertised are no longer available. In this case, advertisers would also need to describe prices as from and make clear the date on which the from prices were accurate. But as well as this, advertisers should hold evidence to prove that the price was achievable by consumers at the time the ad appeared and in reasonable quantities. Evidence of pre-arranged prices with service providers, which demonstrates that there was a reasonable degree of availability when the ad appeared, may be sufficient as evidence for this. What's considered a reasonable quantity will depend on the circumstances of the case. And depending on the medium, advertisers may also need to take publication lead times into account, as it may be considered misleading if the price is very difficult to achieve very soon after publication. So here's an example of an ad which didn't include that information. In this case, the consumer couldn't find any tickets at the price stated. A ferry were unable to demonstrate that the prices in the ads were based on a genuine price which was available. The ad also omitted information about when the prices were last updated, how frequently they were updated, or how consumers would be able to find the most up-to-date prices. This case was considered misleading by the ASA. As before, if you want to read the ruling, you can search for it on our website using the advertiser name on the slide. So that covers the main requirements of the code that apply to price claims in travel marketing. As mentioned at the beginning of the webinar, if you have any questions, you can let us know now or submit a copy advice query on our website by clicking on Bespoke Copy Advice in the Advice and Resources section.
That's great. Thanks very much, Emily. We hope this has been useful in explaining the rules and position in relation to pricing claims in travel marketing. And if you have any questions, as Emily said, please do feel free to send them through now. And you can remember you can keep up to date with our advice and resources by following CAP or ASA on Twitter, or both, and signing up to our newsletter. Thanks very much for listening, and we'll see you next time.